Welcome back to U.S. Farm Report. Well, before we answer the question, is a great commodity reset now underway? We did have the grain deal this week. Some nervousness. Are we going to see Ukraine and Russia come in with an agreement? But we're kicking the can down the road 2 months. So what do some of these wheat producers that are looking at harvest coming up, what do they need to be thinking about, Arlen?
Risk management, that's once again, because the downside price risk. And is the hard red winter wheat crop short? Absolutely it is. And it's shorter than what the USDA indicated. It's shorter than what the trade said. If you look at the 6 analog years for crop condition ratings, 5 of those 6 years saw the hard red winter wheat crop get smaller ahead of the final report on September 30th. But U.S. hard red winter wheat price was overpriced. It had already overpriced that in. We have milling wheat from Europe coming into the United States, and it pencils out right into the interior of the United States. And so that has a big psychological impact on the market. It's been going on for 90 days, but Bloomberg finally picked up the story and kind of woke up the market to the reality. And that pulled the legs out from underneath the only real bull story we had in the grain and oilseed complex right now. Can we get rallies? Absolutely, because this now emphasizes to the world market that it matters whether it rains in Argentina so they can get their winter wheat crop planted and get enough acreage planted. It matters whether El Nino cuts the size of the Australian crop. It matters whether it stays dry now in Kazakhstan spring wheat belt and in Russia spring wheat belt, in Canada spring wheat belt. All those things matter a whole lot more now. So it's possible, not necessarily will happen, but possible that we could see a rally based on one of those factors.
But as you look at prices today and you look at where we were a year ago compared to where we are now, not just in wheat, but also corn and soybeans, and you look at some of these outside markets and other commodity markets as well, Tommy, is a commodity market reset underway?
Well, that's a great question. And the Federal Reserve gave the warning to all investors, all traders around the world. The Fed said, we are going to combat inflation. And the way they do that is by raising interest rates. Now, the Fed funds rate, which you can see at the Chicago Board of Trade if you Google Fed funds, the Fed funds rate's now 5.25. And real inflation, they say, still at 5, which isn't good. But this administration is going to do a victory lap, and they want to squash inflation. There's also a chance, and we haven't talked about it yet, but they may raise rates another quarter and another quarter. The Fed has signaled they want commodity prices to come down. We have an election next year. There's no doubt in my mind this administration or any administration wants to run around and say that they got energy prices calmed down and they got food prices calmed down, and they did that for you, all the Americans. Now, 99% of America is not a farmer, and so that's a heck of a thing to say during an election year.
Arlen, what do you think to that question? Do you agree with Tommy? I mean, is a commodity market commodity reset, is that now underway?
Yeah, I think it's been basically underway since June 19th of last year when we pivoted, and we've been seeing money generally flow out as a result ever since then out of the markets. And we see a strong correlation between these inflation expectations and money flowing in or out of the general commodity space, as well as the grain specifically. So yes, and I expect it to continue. Longer term, what nobody's talking about yet is the implications of all this debt. Over the next 2 to 3 years, the reality of these higher interest rates on the national budget are going to become a reality that's going to affect the commodity sector. I think cheapen the dollar, become inflationary once again. And that's a big problem that's not being talked about yet. That's down 2 to 3 years coming. But that 2 to 3 years we always thought was going to be 20 to 30 years, but it's almost on our doorstep now.
Well, talking about that then, Tommy, real quick, how do farmers need to readjust their mindset as they head into, not just this year, but looking at next year and even the next year?
Sure, I have those prices here. I wish I had my bifocals on, but I'll read you this. December 26 corn's 460 and November 26 beans are 1070. Now, they don't trade actively, but to Arlen's point, and he nailed it, there's a lot of things going on. Could we have a short covering rally? Absolutely. Be ready for it. Have a plan. Put the orders in at the elevator and don't be afraid to commit to those prices. But long term, 2 years, 3 years, 4 years, the Chicago Board of Trade has the prices gently going lower. And what's happened, and to everything, I agree with what Arlen said, your cost production is going to stay high for a while. There's a lot of things that go into growing a crop, And as you all know, it hasn't been easy to get labor, and everything's so doggone expensive.
Yeah, Tommy, Arlen, thank you so much for joining us. We really appreciate it. All right, we need to take a break, and then we have much more this weekend right here on U.S. Farm Report.